So in January of 2021, inflation was only 1%. It seems like a long time ago, but that's about 2 years in. I mean, many people are feeling the pain. So what happens if inflation lasted 5 or 9 years like it did in the 1960s and 70s? So 5 years of 8.5% compounded inflation. And obviously inflation will go up and down. It's been as high as 9 and change. Maybe it gets sticky around 6% when the Fed starts raising rates a little higher. But let's say 8.5%, 5 years compounded is going to erode 35% of your wealth, which means that if you had $100, this $100 now has $65 in purchasing power after 5 years. And then let's say inflation lasts 9 years like it did in the 1960s. It's going to erode 55% of your wealth. So your same $100 is now going to have $45 in purchasing power. So that's what inflation is going to do to your wealth. So let's look at different asset classes to see how some of these things perform during that period. So a lot of times people are in a portfolio allocated to stocks, and they're hoping that stocks are going to be able to react positively towards inflation. If you look at the 1960s and 1970s, unfortunately, the S&P did not do so well. It actually lost money in the 1960s, and it only gained 4% in the 1970s. And keep in mind, this was double-digit inflation. I think in the 1960s, inflation was about 12%. In the late 1970s, it was pushing 15%. So even a flat portfolio here still meant that you lost a ton of money due to inflation. So let's look at gold, for example. So if you look at the same periods, 1960s, gold went up fivefold from 35 to 200. And then in the 1970s, it went up eightfold from 100 to 850. So time will tell what gold and stocks will do. But if history repeats, stocks may struggle in the next couple of years and gold may do well.